All right, looks like the live stream software is working. I just found more proof in the last week that everyone or almost everyone in terms of big government, central bank policy, monetary policy is doing pretty much the same thing. This is going to be a very short show. Just wanted to show another quick example of another government and another central bank doing Japanification, doing StagflateTaxLie, and monetizing government debt. Although the deflationists don't want to call it that, but this is how the central bankers and big government are fighting deflation, are trying to fight their own currency exchange rates going up against the dollar. I have that there on your screen of the New Zealand dollar, the exchange rate, how on March 23rd it spiked against the dollar, and then it's been devaluing ever since. But this story is about the Japanification of New Zealand debt. It's from November 9th by Masaki Kondo from Bloomberg. Japanification stocks New Zealand debt. That's 37% now owned by the Reserve Bank of New Zealand, which is New Zealand's central bank. Now, New Zealand's not a large country, but again, this is just adding to the case studies that we have been studying over the last couple weeks, showing that pretty much all these governments, whether they're running a dollar peg or not, it is easiest for these other governments and their central banks to maintain the size of big government or increase the size of big government, because never let a good crisis go to waste. There's crisis and opportunity, and they're printing more currency units to buy government debt to maintain the size of government, so there is no shared sacrifice for the politicians, for the bureaucrats and central planners. There is no shared sacrifice that us here in the private sector are getting killed with, and the size of government is actually growing. Here in the US, where lots of brainwashed sheeple here blame capitalism for all the problems in society. Meanwhile, the size of big government here in the United States, it's up to almost 50% of GDP. It has grown a lot in the last 7 or 8 months. It is about the size of Sweden now. Now, if the US was actually counting the off-balance sheet expenditures for all the military spending, the trillions of dollars extra that are spent per year, I suspect it would be over 50. Government spending at all levels would be over 50% of GDP, but there's a lot of US accounting and unfunded liabilities and other expenditures because the US federal government does not have to use generally accepted accounting principles, does not have to account for unfunded liabilities, and they can move a lot, trillions of dollars a year in spending off balance sheet. So the US's government spending to GDP is considered much lower than it actually is, but it's still around 45% now, which is around the size of Sweden's. But there is no shared sacrifice between the private sector, many Main Street, small and medium-sized businesses, versus government employees, politicians, and bureaucrats. You are not seeing governments in many cases cut back. So the Reserve Bank of New Zealand's growing dominance of its bond market is sparking unfavorable comparisons with Japan. The Reserve Bank of New Zealand, or New Zealand Central Bank's ownership of the nation's outstanding nominal government bonds has skyrocketed from only 6% to now 37% in the space of only 7 months. And this is a win-win scenario for big government, the politicians, the bureaucrats, and the central planners, because they can print currency units, New Zealand dollars, out of thin air to buy government bonds to maintain the size of government so their salaries are maintained, and also to weaken their currency against the dollar. And this is what a lot of these countries have been doing, and I've been covering case studies on this for the last few weeks, whether that's India and other countries. 6% to 37% of the entire bond market is now owned, of government bonds in New Zealand, is now owned by the Reserve Bank of New Zealand. That is an enormous explosion. According to calculations by Bloomberg, based on data from the central bank, it took the Bank of Japan Governor Hirohiko Kuroda more than 3 years to reach that level, and his starting point was over 11%. The ultra-aggressive quantitative easing program has helped to cushion, I wouldn't call it cushion, but Bloomberg is, the owner of Bloomberg, Michael Bloomberg, is a big government Democrat, has helped to cushion the New Zealand economy, but as was the case in Japan, from hearing from friends in New Zealand, it is not a pleasant place right now to live, as a lot of the Labour Socialist Party is gaining power. There's enormous lockdowns. It is a mess there in the private sector and for people's freedoms and liberties. It is a total disaster. But as was the case in Japan, it risked killing bond. Again, I'm not a New Zealand expert, but just the stuff I'm reading and hearing from some of my patrons, it's just a mess there. But this is just proof more Japanification. They're monetizing government debt because, of course, they have to fight deflation because governments can't tax deflation, so they have to fight it. And they're all trying to do basically the same thing. Everyone or almost everyone is doing pretty much the same thing to try to fight deflation. So Japanification, yield curve control, the central bank is printing enormous amounts more currency units out of thin air to maintain or increase the size of big government, so governments get even more power during the last 7 or 8 months of this crisis. And we'll see what happens with MMT-QE. I don't know if everyone's going to get a check all over the globe. It seems like that's going to be popular here in the US because for now we still have the world reserve currency, but we'll see what happens. But as was the case in Japan, it risks killing bond market volatility as the professional bond traders in Japan, some bonds don't trade at all. The trading volume before the pandemic in Japan was very, very low for Japanese government bonds, as the Japan Central Bank, the Bank of Japan, and Japanese pension funds own the lion's share of Japanese government bonds, and a lot of private sector professional bond traders don't even bother to trade it because it's not really a market anymore. And then you have Ben Bernanke talking in 2016, I think, talking about advising the Bank of Japan on issuing zero coupon perpetual bonds, which would basically just inflate away the rest of, or issue 100-year Japanese government bonds and just inflate away the debt entirely. It risks killing bond market volatility, sapping trading interest, and crimping bank earnings. A subdued market with depressed yields may also deter overseas investors, limiting foreign capital needed to fund the current account deficit. Quote, the Royal Bank of New Zealand is really the Kiwi whale from a bonds and monetary policy perspective, said Prashant Nuwanha, senior rates strategist at TD Securities in Singapore. The risk is they'll crowd out other investors, but this is what all these governments and central banks are doing out of desperation to fight deflation. They won't allow free market forces. They won't allow deflation. Most importantly, for libertarians and people like small government, they will not allow the size of government to contract. They will not allow shared sacrifice. You don't see a lot of these politicians and bureaucrats, unelected bureaucrats that have gained immense amounts of power in the last 7 or 8 months. You don't see them wanting to take a pay cut, and you don't see them wanting to relinquish the power that they have gotten. It is that messed up. Okay, the rest of the article talks about the Japanese government bond market and some of the things about Japan. It'll be below the video in the information and description section, but just more shenanigans by all these different governments, okay? The main common theme, and not every single government is doing it the exact same, but it is a very common theme. The easiest way for all these other countries to devalue their currency, to get a favorable exchange rate, to weaken their exchange rate, to boost exports and help GDP, nominal GDP growth, is to devalue their currency against the dollar. And that's what's helped keep the dollar index around 92.51. I mean, the dollar should be a lot lower, but the way the global financial system is designed, there is artificial demand for dollars with these $66 pegs and other countries maintaining their currency exchange rates, wanting a weaker currency versus the dollar to boost their exports. And then they're also now monetizing debt, creating currency units out of thin air to buy their own government bonds to maintain the size of government or increase it. So this is just another classic example. I've been covering this now for weeks. Again, I don't think you've heard this anywhere else. Even Jim Rickards, who wrote the book Currency Wars, he's not even talking about this stuff anymore, which I'm just shocked. He wrote the book on this. This is how I learned a lot of this stuff, was from Jim Rickards' book Currency Wars, and he's not even covering this stuff anymore, which is really a head scratcher. He just talks about deflation now. I honestly have no idea why. I have no idea what's his current agenda or what his newsletters are trying to pump. But this is exactly what's happening. You have currency wars, you have beggar thy neighbor monetary and trade policies. You have not seen retaliatory tariffs go up everywhere yet. You have seen China play a lot of games with Australia on Australian imports, with Australian cattle and Australian lobsters and Australian wine companies on Australian barley. But you have not seen all of the beggar thy neighbor policies yet. That doesn't mean they won't happen, but in terms of currency wars, we're already headed down that path. So we've heard other people, I think it was Gerald Celente, say first there's currency wars, then there's trade wars, then there's, I think, resource wars, and then there's real wars. So hopefully we're not headed down that path, but history is pretty clear that as the economies in all these countries get worse and worse and worse, normally politicians make up war propaganda and take us to war. Normally there's like a Gulf of Tonkin incident or the Lusitania sunk, those types of things. Normally, from a historical standpoint, that is what happened. There's some type of incident, some type of false flag with the Spanish-American War, how the... I can't remember this off the top of my head, but William Randolph Hearst, I guess, was involved in that, and it looks like that that ship, that destroyer, may have been sunk on its own or blown up on its own, and then it was used as war propaganda against the Spanish to launch a war, declare war against the Spanish in the Spanish-American War. So the U.S. government and many other governments have an enormous history of war propaganda. But all these governments, or almost all of these governments, because you can't say every single government, I haven't looked at all of them, but I've seen a lot of case studies, and you just have tons of examples of these central banks and governments creating currency units out of thin air to fight deflation, of course, because we all know deflation is bad, right? An improved standard of living, especially for those of us that don't have debt, inflation is not that bad. If we don't have debt, if we're debt-free, I'm debt-free. If we're debt-free, deflation is not that bad. If we have savings, deflation, our purchasing power is improving, we're getting more goods and services for less currency units. So our purchasing power is improving, as long as we don't have debt. But inflation helps debtors, and governments and corporations, large corporations, are in enormous amounts of debt. So these governments are, or almost all of them, are Japanification, and Japanification, in my opinion, is a version of StagflateTaxLie. But now you're having the mainstream Bloomberg talk about Japanification, and they're totally ignoring how all this debt is being monetized. So back when I started finance in the financial industry almost 15 years ago, it was looked at as very, 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 very bad for governments and central banks to be monetizing debt. It was looked at as very, very inflationary. You should not do that. It's really bad. Ben Bernanke, when he started the QE programs, he made it a point to argue in public, in speeches and papers, we are not monetizing debt, even though the U.S. government was monetizing debt. They were buying treasuries. Okay, the Federal Reserve was buying massive amounts of treasuries. They were monetizing debt. They were trying to weaken the dollar. So monetizing debt is looked at as, it used to be looked at as bad. Now apparently it is happening, and they're not calling it that, and they're trying to say it's no big deal because they're fighting deflation. So that's it for this short little live stream show. If you want to read more about this example, I'm sure there's going to be more. We're going to find out a lot more examples of these governments and central banks trying to maintain the size of big government or increase the size of government. There is no shared sacrifice between these politicians and unelected bureaucrats getting high salaries. A lot of them are not getting fired. They're not taking pay cuts. Meanwhile, us here in the private sector, we're getting killed. So the size of government is staying the same or growing. It's crowding out the private sector. It's destroying it. And anytime these politicians and bureaucrats and central bankers make mistakes, they just blame it on capitalism, because that's how brainwashed most people are. Most people are too lazy or too brainwashed to do even 5 minutes of research to see that if the size of government is 50%, and I don't like GDP, I think it's a crooked government statistic, but if the size of government is 50% or more GDP, that's not capitalism anymore. But unfortunately, lots of people are lazy or stupid or brainwashed, and they're just going to blame it on capitalism because it's really, really easy to blame things on capitalism and not look at, hey, wait a second, the size of government is like 60, 70% of the economy now. There's enormous waste, fraud, corruption, and abuse. They're giving out unbid contracts. They're stealing everything they can. And they just blame it on everyone else. Unfortunately, this is a lot of people in society now. Okay, so the article will be below the video in the information and description section. I just wanted to do another case study on this, but this is the new normal now. So they're fighting deflation on our behalf. Governments cannot tax deflation. There's a lot of other tax reasons why government will not allow deflation, because if you have losses on your stocks, bonds, real estate, business losses, investment losses, you can write those off against taxable income. So governments hate that, especially the U.S. government, because so much of the U.S. government's annual tax revenues are reliant now on capital gains taxes on stocks, bonds, and real estate. So that's a big, big no-no. Luke Gromen has talked about this. In the last 20, 25 years, the size of the U.S. government annual tax revenues has become enormously dependent on capital gains taxes on stocks, bonds, real estate, and other types of asset trading like currencies and other things. And that's how the banks make the majority of their money. The large U.S. banks don't even make the majority of their money lending anymore. They make the majority of their money manipulating markets, selling bonds that the economy can't handle. The economy cannot handle any more debt, and yet the large Wall Street banks are selling even more of it. Billions of dollars per week in more debt, adding to the global Ponzi scheme, and then also going to the casino and just making enormous dumb leverage bets where it's heads we win, tails you lose, profits are privatized, losses are socialized on leverage currency trades, leverage bond trades, and leverage over-the-counter derivative trades. And that's how the large banks make tens of billions of dollars per year, while the velocity of money that measures lending and spending in the real economy in the banking system collapses. And that's why you have stagflation in the real economy and shrinkflation too. That's hurting so many everyday Americans, average everyday Americans. Okay, well, that's it for the short live stream show. Thank you for listening. Thank you for letting me rant for a couple minutes. If you want to take a look at more of my work, it will be behind the paywall on my Patreon account for only $5 a month. There is a lot of research, information, analysis, and financial education there. Over almost 150 pieces of unique content there for patrons. Because God, I'm probably going to make like $2 or $3 for doing this YouTube video. I don't even know why Jim Rickards is not even talking about the currency wars and all the crazy stuff going on, because that's how I learned all the stuff I'm talking about now. It started with that. So this is a perfect example. You have governments trying to, in competitive devaluations, the race to debase, they are monetizing debt. They are creating trillions and trillions of currency units out of thin air. I don't know if anyone's actually monitored all the currency units all these governments have created the last 7 or 8 months. It has to be many, many trillions. But don't worry, they're buying all the government debt, they're protecting the salaries of the politicians and the government bureaucrats, and they're screwing over you and me in the private sector. Welcome to dystopia.